Well, welcome to our Thursday edition Market Day Report. Mark Oppold here as we open the markets in about 15 minutes. But even before then, we're going to check in with one of our great friends here, Brian Hoops, and get the day started. We have some export numbers out, export sales numbers out earlier this morning. Let's start there. You have all the numbers and a reaction, I would think, as well.
Yeah, you take a look at these numbers, Mark. They weren't terrible by any means. We're starting to get into old crop, new crop for both corn, soybeans, and we have been for wheat for a while. So old crop wheat, 3.4 million bushels, but the new crop was around 6.2, so a decent number. Old crop corn, about 19.7 million bushels. The new crop, pretty small, 2.6 million, and old crop beans at 17.9, which I think the trade had tried to dial into yesterday's higher prices because we had some private sale announcements last week that would translate into these export sales. So it was a pretty good number, but again, it was widely known already by the trade. New crop soybeans, 9.7 million. So again, a decent number. Now, we did have a private sale announcement this morning as well, and that was 138,000 metric tons of soybean meal that was sold to the Philippines for delivery for this marketing season. So these export numbers, again, widely anticipated, not going to give us any real direction. You know, we're looking at weather here in the U.S. as farmers are starting to seed. We've had a lot of clients tell us, you know, they're planting corn, maybe some soybeans ahead of this week's rain event. Some are just doing field prep, waiting for the rain and the cool temperatures to kind of move out of this area. By next week, it looks to be, you know, a lot of rain across Iowa, northern Missouri, right where they needed it, and warmer temperatures next week. So it's going to be pretty ideal, and that's going to keep a lid on rally attempts, I'm afraid. Really, the only real positive news this morning is a report coming out of the Rosario Grain Exchange where they said they're likely to cut their forecast for Argentina corn production once again. They really slashed it last week, 6.5 million tons ahead of the USDA report, down to about 50.5 million ton crop. And Argentina is the third largest exporter of corn in the world. They've taken over from the Ukraine as far as exporting sales to China. China's been an aggressive buyer of Argentina corn. So maybe this will open the door for the U.S. to get a little bit of export business if they do continue to slash their crop. Now, the USDA did not cut production much in Argentina last week in that supply and demand report.
Let's take a look at the numbers overnight here. Again, Brian Hoops, great job there getting us all the numbers and getting started here as we open this trade. Corn overnight down, he said not a whole lot of direction. May down 1 3/4. December new crop down 2 3/4. We look at the soybean trade. You spent a lot of time there talking about soybeans in South America. Beans were down 8 overnight. Really pretty much across the board. May down 8, 1141.5 where they start now in about less than 15 minutes. November new crop down 6 3/4. And then we look at the wheat trade overnight. Wheat was unchanged to a bit lower. May down a penny. Kansas City, the nearby May contract, Kansas City futures were up actually about a penny and a quarter in the May, 574 we start there. And in Minneapolis, the spring wheat, the biggest advance of all, of any commodity there this morning, up a nickel over May, 5 1/4 higher, 638.5 here. Difference between the spring and the hard red making a difference here, at least overnight, Brian. Any reason?
Well, you look at the temperatures that are in that spring wheat belt in the Dakotas, Minnesota, Montana, you know, it's 20 degrees this morning in a lot of those areas. So it's really too cold to plant. They're starting to actually fall behind a little bit on their spring wheat planting. So I think that spring wheat market trying to give us a little bit of incentive to plant those acres. And it is expected to warm up. So I think they'll get things in the ground. But at least for today, it gives the trade something to go off of where, you know, crop rating is pretty high in that winter wheat belt. We're not getting a lot of export business. So we'll put a little premium in, a little spread trade between spring wheat and the winter wheat of Chicago and Kansas City.
Very good. All right, Brian, we're going to give you a break here for just a few minutes. So we'll come back and check the livestock trade. We're about 10 minutes away from opening cattle, feeder cattle, and hogs. We'll get his thoughts pre-open in a moment. All right, we are less than 10 minutes away from opening our trade, grain and livestock. We have Brian Hoops with us this morning giving us the numbers from the export sales for grain. There are export sales for livestock here as well. How do those numbers look this morning, Brian?
Well, it's a marking your high, marking your low type of
Yeah.
event for the cattle and the beef. So you had beef sales, 17.7 million tons, a pretty respectable number, an improvement of what we've seen over the last 3, 4, 5 weeks. But the shipments were a marking your high, 16.7 million tons. So it's good to see that we're actually moving some of this beef product because it's been fairly slow. And that's been one of the concerns in the trade industry is that we're not actually moving this product, but we finally maybe reached a price level that's going to stimulate some of that export demand. Whereas pork sales were 21.8 million tons. That's a marking year low. That's really a disastrous type number for that pork market. China really stepping away. Mexico not buying a lot of product either. In fact, no one was buying much pork products. And I think that's a reflection that price is moving up into some, overhead weekly resistance. At those price levels, we're not selling much pork products.
Well, let's start with the hog trade then. We leave off there, or you left off there with that number. Let's check the overnight, or yesterday's rather, close here in the lean hog complex. So taking a look at what May at 90, just below 95, June at 102.70 plus numbers. Might be some support numbers to watch today?
Yeah, we talked about maybe that 102 area is kind of a support area for June, and we seemingly have bounced off of that and kind of struggling. Now, we had a big reversal last week. Seems like we're trying to do some retracements, 50-60% retracements, which we haven't accomplished yet in those hog charts before we maybe take a move lower. So we may have some upside building to do, but probably not going to get it off of the opening today with these poor export numbers. Yeah,
so 102 would be the first line of defense there, I guess, or support to be watching here today. All right, let's look at the live cattle futures then. Brian Hoops with us with the Midwest Marketing Group in Springfield. You have some rain around your area, by the way. And live cattle futures down over yesterday, 40 to 60 points. Numbers there. Again, we had the marketing year high. Where might the June contract go with a high yesterday over 176?
Yeah, you get up into the 176.50, 60 range. I think you're going to run into some resistance. So I think there's a decent chance we do try and make some new highs here for the week, especially ahead of tomorrow's cattle on feed reports. Still don't have any cash trade developing. Asking prices are like 184, 185 in the Southern Plains, $2 to $3 better than last week. So we've got some work to do in the cash markets. The futures chopping around, but I think they do want to take that run into maybe some overhead resistance where most likely we'll see some hedge pressure or some selling pressure capping the rallies. And
then the feeder cattle trade here, April on the board for another week or so, but May down 70 points yesterday, 240.27 after a high 241.5. And then the August contract again up over 252.80 plus, but closer to 252 as they closed. Any danger there, I guess, of holding support level?
Yeah, the feeder cattle, kind of like the June live cattle, made some new highs yesterday. They're trying to run higher, probably get a little support out of the weaker corn market. And again, the demand for these feeder calves has stayed strong. Yesterday's feeder cattle index up over $1, I think $1.29 higher. It shows us that the cash markets, sale barns, red hot. Yeah. They're not backing off despite the weakness in the futures.
Real quick, we have just a few seconds left. I want to bring up the crude oil here for folks as we keep an eye on that all week long and see if we can, there we go. May is a little bit higher as we speak here now, at least starting out the day. May up 27. What about the $80 now? We talk about 90 early in the week. Now we're talking maybe holding 80.
Yeah. In fact, the overnight low down in that 81.80 range. So we dropped off pretty sharply, or 81.30, I should say. We dropped off sharply, and then we're starting to come back here now. So we had just a big sell-off yesterday. We're going to run into a lot of resistance up in that $83.75, $84 range. So we'll see if we can get back to that area today.
Well, that was going to be support early in the week. Now you're saying that 83 might be resistance. What a week! That's what it's all about. Brian, thanks for your time as always, and look forward to keeping in touch.
You bet. Thanks, Mark.
Have a good day. Brian Hoopser, Midwest market specialist out of Springfield, Missouri.
Yeah.
Near hometown.
Got a lot to keep an eye on.
Not hometown, but near home.
Right. Yeah. Very familiar with that area.
Yeah,
all right. Thanks, Mark.